Hey traders, it's Chris. Hope you're having a wonderful day. This is a quick video on how to set up your intraday settings on MT4 as I use mine on a daily basis. And you can bank between 200 and 300 pips per week with this simple system on a regular basis, if that's the kind of thing you are looking to do. So I'm going to go over the settings. I'm going to go over the trading rules so that you can immediately benefit and start trading as of tomorrow or even today if you're watching this on a trading day. So here we go. The first thing we are going to do, I've got two moving averages. One is the 7 simple moving average. So if you're not sure how to put that on, indicators at the top here, trend, moving average, and then you just put the 7 simple moving average. The second one I've got is the 100, okay, which is this one, and you just add that simple moving average, whatever color you want. And I'll go over the trading rules in a minute. Now have a look down here on this stochastic. So I've got a sell zone to your left, sell zone to sell below. I've got a buy zone, and I've got a buy above. So far so good. So you can't see that, it's very small writing, I know, but nonetheless this is on my iPhone, and so this is one way to trade on your phone if you're traveling, or if you just fancy putting a trade on while you're moving around. Okay, so let me just double click this. Now to put this on your chart, just simply go to indicators, oscillators, stochastic oscillators, and your parameters are 14, 7 and 3, and you have several levels here if you can see those. I have a 20, I have an 80, I have a 90, and I have a 10. So the 10 is a buy zone, the 90 is a sell zone, 80 is sell below, and 20 is buy above. Okay, so don't need two of them, do I? So here are the rules. Here are the rules. Oh, also I've got the trend meter, just to put this onto your chart if you fancy that. This tells you where the trend is for now. So this is gold. Markets are closed now, but gold is saying 64% chance of going down. And as we can see, there's been a bit of weakness coming into the market. And I'll go over the rules in a minute, but let me just show you how to get the trend meter. Just go to terminal, type in trend strength meter here, and you want it free, you don't want to pay for it, and it's this one here, trend strength meter. Okay, and that will come onto your screen once you've uploaded it and added it to your terminal. So let's get on to the trading rules. So the first thing that I will say is whenever the price moves into the 90 area, the sell zone, which is this area here, I'm interested in a sell, even if it's against the trend. But if I have a bonus of divergence against the trend, then that's extra confirmation. If you don't understand divergence, then contact me and I'll get the book to you if you haven't read the book already. So divergence is a very clever way of predicting when the market's going to go in the future. It's a leading indicator, and so therefore the RSI is producing lower highs and the price action is producing higher highs, and so therefore there's something hidden in the market which is going to drive the price down. This might not seem a lot, but this moved down to 23.75, let's say, down to 23.60, so 150 pips there. And there's another one here, 23.69 down to 60, so 80 or 90 pips there. So the first thing that we note is where the price is in terms of price action. Is it overbought? Is it oversold? So we can actually judge whether the price is actually going to move up or down. And it works particularly well on the 15-minute chart, and works particularly well for gold as well. As you may know, I love gold. And so this is why this has been designed. And you can see, if you look back at these situations here, where the price moves into the 90 area, that's too far. And when the price moves into the 10 area, then that's gone too far. 10 is too far, 90 is too far, and so on and so forth. So there's lots of opportunities throughout the week to get into these positions, and it works on any asset, of course. So you can trade the pound, yen, or whatever you want to trade. So there's several ways to use it, and the first way is to understand where the trend is. The long-term trend is still upwards. There's no change of market structure yet until we breach the previous swing low. So we can say that there is the swing low. There is a swing low, and so on and so forth. So we can actually say that the price is still holding on to market structure in an uptrend. Until that's broken, then we have to really look for buys. Although, as I said, extreme overbought with divergence is a very powerful tool. Now, as we can see here on the most recent, I'm going to have to zoom in, I think. Ooh. Yeah, that's better here. It looks better on the phone, actually. I prefer it on the phone, this one. Trading view is better on the PC. So we have a 90. So this is the sell zone, if you remember. So this is a warning for a sell. Now the trading rules are quite straightforward in that I'm looking for the price to come down into and below the 90 to confirm. The other rule I want to see is that the whole of the candle is below this 7 simple moving average. As long as the price remains below the 7 moving average, we can expect from history that the price is actually going to fall, and you bank your money. Let's look at another one here with divergence this time, which is better. I like this one a lot. And as I say, I'll post these into the gold signals group. And so we can say that the price has come into the 90 with negative divergence. It's come out of the 90, and have a look at the stochastic moving down. Now, of course, sell below the 80 is another option if you're not at the chart. So there, and look at the direction of the RSI as it falls into the buy zone. Of course, we wait for and ensure that the whole of the candle is pretty much there, isn't it? The whole of the candle needs to be below the whole of the 7 moving average, and the price slides. Now, what about continuation patterns? Continuation patterns with the trend are obviously a fantastic way to trade using price action, and so therefore we can say, okay, where do we enter? We don't want to be entering. I'll find my tools. We don't want to be entering while this price is here. This or here, or here, or here. Because there's something going on in the market that says, hold on a sec, that's gone too far already. So you're not going to make your money quickly by doing it that way. You actually probably have a lot of pain, to be honest. So what you can do is see this on your phone where the price has retraced, come down, and now has gone back up above the 7 moving average. So let me zoom in again so we can see this a little bit closer. So we can see the crossover here at the same time as the price has finished above the 7 moving average. The whole of the candle is above. The whole of the candle is above. Here is no good because the price can do that. Here is good, and then you can have a stop at the swing low here. Go for 2 times risk, and that's an excellent way to trade continuation patterns. So the reversals or the trading against the trend is okay, but just make sure that if I were you, I would use smaller lots on the way back down, and use your normal lots in a continuation of this impulse wave, because they are going to obviously bank the most money because it's with the trend. So in this instance here, as it comes above this 7 moving average, and this is in neutral, it's not here, it's coming down. So in other words, the price action on this chart is getting ready to make another move, and the stochastic is allowing the price to rest, if you like, before it starts to make that big move up again. So there's lots of trading opportunities throughout the day and the week, and I predicted 200 or 300 pips a week just using this chart, but actually it can be a lot more depending on how markets are moving. Now, what can you see right now? So first thing we note at the trend meter, this does change live in a live market, and you can actually see where the trend is, the strength is in the market. As you can see, the strength is down 64%. Anything over 60%, I say, is good enough, or above 60% is good enough. And sometimes during high volume markets, you'll see it go up to 90%, which is fantastic. So the first thing we note here is stochastic now has come down into a very important area of 10. This area here is 10. This is the buy zone. So we're waiting for the price to come back into the buy zone. You can be buying it here or even here. So what has to happen before we get another buy? And first of all, the price has to hold on to market structure from this previous swing low. And if as long as it does, then we're going to see probably quite a big move here on gold. And so what we wait for now is for the price to move up into this area here, and the whole of the candle finish green, of course, in above the 7 moving average. And as long as those conditions agree, then you can expect maybe 100 pips or even more each time. Gold is a big mover, as you know. You may know, you may not know. Gold is a big mover. You can expect 100 pips easily on any one position each time. So a fantastic way to intraday trade, a fantastic setup on your MT4 charts on your phone, so that you can continue looking at the markets if you want to. I don't recommend a whole lot of time looking at the markets throughout the day, because at the end of the day we have lives to live, and it's important that you do that because you don't want to get obsessed with the markets. It's not something that I'm obsessed by, it's something I love. However, I do think that it's probably a good idea to come in now and again to the intraday charts. And the other thing, of course, is you can actually use these as an entry point for position trading. So if you're with the price action charts, for instance, these will coincide nicely with those.